Welcome, everyone, to another chat, a Gold Matters chat between Matt Piepenburg and myself. Matt's certainly seeing real spectacles happening on markets today. And to us, nothing of this is surprising, of course. We've been looking at risks for years, and this is now, we are at a maximum risk, and therefore anything can happen in any market at any time. Only a fool tries to forecast exactly the timing of risk. Much more important to just be prepared and protect against this risk. The stock market, to me, has been obvious. They're overbought and they're overvalued, all due to printed money, and therefore people believe that forests grow or trees grow to heaven. But they don't, and at some point it ends, and people should be prepared for it rather than buy the next dip, in my view. Debt markets are the same, and obviously the consequence of all of what's happening now, and we mustn't forget also the political scene. What's happening now around the world was happening, first of all, the wars, that part of this pattern also, debts and wars go together, and of course, the riots in the UK. I mean, I've been forecasting these riots for around the world, especially the fights between neo-Nazis or Nazis or extreme right wing people. A lot of them are, of course, hooligans, if you want. They just want to fight. And then on the other hand, the immigrants. That is something that is going to happen in many countries. I know politicians hate anybody forecasting this, as Musk has and others, but it's an obvious consequence also of the area we're in. But we are here not to really help people on the political side, just to warn them on all the risks that we're seeing. And of course, the first thing is market risks. Can you just explain to people what has happened now in the last few days? Why all of a sudden did all of this trigger?
Yeah, I mean, to your point, Egon, there's so many issues at play, geopolitical, political issues. We're really here to talk about, markets and wealth preservation. But the latest needle pointing at this massive geopolitical debt balloon was what happened on August 5th, or we could call it another Black Monday this week. The famous Japanese carry trade is what it's being called, which is, complex, but ultimately very simple. And I'll try and explain it quickly and make sense of it. But the Japanese carry trade is basically Japan and the yen and the low rates in Japan being one big prop desk for the West and for Japanese and Western shadow bank investors. The yen and the rates in Japan have been remarkably low because of deflation there for years. And so investors could borrow yen basically for free, arbitrage that by then taking that money to primarily US markets to then get a cheaper rate to lever more risk and buy more tech stocks. And that is a wonderful model as long as two very dangerous assumptions stay the same, that rates in Japan stay low and that tech stocks stay high. And what happened this week was, of course, that reversed. The Japanese central bank raised its interest rates by 15 basis points. They did it in August and then earlier in March as well. But that small little rate hike sent the markets into an absolute tizzy. And that's what we saw this week. So the cost of borrowing got higher. The leverage was caught naked, as Buffett would say, levered and caught swimming naked at low tide. And we saw major collapses in the markets. In Japan, the Nikkei 225 index saw its worst day ever, over 4,500 points. Its two largest banks were down 12 to 15%. In the US, the tech stocks, the Magnificent Seven, the Fabulous Five, or the Magical Three, they all tanked remarkably. The NASDAQ 100 futures tanked 6.5%, etc. So there was a panic in the markets based on a small rate hike out of Japan. The ripple effect. One simple needle. Again, you and I've been talking about this for over a year. This Japanese carry trade was going to unwind, and so all these things happen.
Can I just say that this carry trade is just a sign of the incredibly inflated and speculative markets we're looking at. So these are not ordinary people that are carrying out this carry trade. These are all speculators at higher levels, hedge funds, investment banks, etc., taking enormous leverage positions. So, that in itself is a bubble. And if you compare, then also look at the country they're playing against. As a country, Japan, that has 500% debt to GDP. It's just astronomical. There are risks everywhere. This is what I want to point out. It's not just the carry trade, but it's also against a country which is bankrupt in itself.
Sure, it's just another example of, quote unquote, the smartest guys in the room and these shadow banks and hedge funds just basically drunk driving with huge leverage and massive risk. And again, we saw the consequences immediately this week. They've kind of volatiled back up. The other big thing was, of course, we can't deny it, Bitcoin took a massive bath as well. And that's supposed to be a, quote unquote, store of value, but the volatility in there is clearly evident. We won't get into a Bitcoin conversation, but that's remarkable. I think what says going forward, to your point, the quote unquote smartest guys in the room are just drunk driving with leverage going further and further out on the risk branch for any kind of yield in a market that's completely overvalued and recklessly driven. Interesting enough, you noticed this week or before this week, Berkshire Hathaway had already gone over 200 billion into cash and cut its Apple position in tech by 50%. So some of the smarter, truly smarter value guys in the room did see this coming. And I'm not saying they're psychic, but it was fairly obvious with all the risks in the world. Another interesting stock that went up temporarily over 20% was Lockheed Martin, Egon, which is a major military contractor which benefits from war. Those are dangerous sides. Look, we saw what happened with Bitcoin, with the S&P, and with gold. Gold did far, far better in terms of volatility and price maintenance than the S&P, Bitcoin, or these other assets. I think there's only going to be one winner, and I think how gold performed this week is an indication of that. But again, Egon, the global debt balloon, as I said, is surrounded by so many needles. This is just one of many foreseeable needles. We just saw one this week. And it's, again, as you said at the beginning, this is no real surprise to us. And it dovetails directly into the conversation that we are experts on, that we discuss more than anything, obviously, is gold. And why do you think, Egon, even despite what happened this week and the way gold, held its own far better than other asset classes, why do you think gold is still not so obvious to the rest of the world? Because as we speak, it's still less than 1% of global allocations to physical gold. And to me, the case is more and more obvious. What's your take on why gold isn't just clear and convincing at this point?
For me, Matt, having entered the gold market in a major way for ourselves and our investors that we advised at the time, in 2002, we started really investing heavily into gold. It's been obvious all along. It's such an easy equation. We know that throughout history, central banks and governments have destroyed the currency, and every single currency has gone to zero. So, and now when debt levels are more elevated than ever in history, it was obvious that gold was going to be the best instrument to protect against that risk long term. Now, gold doesn't move up in a straight line, and we've seen big moves to 2011, and then we see consolidation for 5, 6, 7 years. And now the next move has started only because global debt is now at a level which is unprecedented in the world. The US debt now is, for example, 35 trillion. It wasn't many years ago when Trump took over, it was 20 trillion when Trump took over as president. Now it's 35. It's growing exponentially. And with the deficits that we're seeing in the US and in many other countries, and including Japan, of course, as we just discussed, and China, enormous debts, it's obvious that this is now going to accelerate because US deficits are forecast to increase dramatically, and that doesn't take into account all the risks within the banking system and within the financial system and within the corporate system. So I think the money printing will be much bigger than anybody expects. And therefore also I think long-term interest rates are in an uptrend, although there might be a short-term cut by the Fed, panic cut or not. Well, let's see. So all of these factors point to gold just reflecting the destruction of the money. Now, the forces also that are into gold, and I think you'll talk more about that later. One of them, which is obviously very, very important, is how central banks are converting their reserve assets from dollars to gold. So we are not just going to see gold reflect the continued debasement of the dollar and all the other currencies. We are also going to see gold as an investment enhancing with enhanced returns by actually performing better than just the destruction of paper money. And remember, there's no gold in the world. There's only 3,000 to 3,500 tons mined every year. And if you take China and central banks buying just in the last year, they bought for 3,000 tons. So, which means that there's not enough for the rest of the world. And the rest of the world is going to, coming back to your question, is going to discover gold now in a major way because there's nowhere to run. I mean, I've put out some tweets this week showing that I expect the NASDAQ to go down 95% against gold in the next few years because you have a tech bubble and you have gold being unloved and undervalued, and nobody owns gold, nobody. But yeah, there will be a shift into gold, and it doesn't have to be a major shift at all for gold to move because of the major shortages of gold in relation to the demand that we will see. And those shortages can only be reflected in price, i.e. the price will go up not by marginal amounts, but by factors of 2, 3, 4, 5 or more times. And that's what I expect in the next few years. And that will be starting now. And don't believe that this little pause in stock markets and the gold and silver mean anything. But this trend is going to continue strongly down asset markets, up precious metals. But there are other factors also, Matt, that you're seeing that will affect this. Let's just hear your view on those also.
Well, they're very similar to yours, and it's interesting. You and I always joke that we're no fun at a cocktail party for the last few years, or at a wedding reception, making a toast and talking about buying gold. We've been telling our clients, and our clients have been getting this for years. It's not sensational; it's reality. Be very wary of currency destruction, market risk, banking risk, etc. And what's interesting now, and we've been calmly saying this, and it's not sensational, it's not doom and gloom, it's common sense and math. And yet now the world is actually catching on to what our clients have known for decades. And that's very interesting to see these forces in play, because look at what the world is doing, not what the politics and consensus media is saying. And again, these are very, very clear and convincing signs. As you talked about, Eastern central banks in particular stacking gold at record levels for a reason, and they're dumping US treasuries at record levels for a reason, because they no longer trust a weaponized world reserve currency that can be taken at will. And that basically is losing its value. So just the actions of Eastern central banks should be clear and convincing. You also have more than 47 nations now trading outside the US dollar. That's slow and steady. That's not overnight. We've talked about the risks of weaponizing the dollar 2 years ago, and that's happening even faster than we thought. We're looking at an oil trade now that's being increasingly sold outside of the petrodollar. We're seeing Russia and China making oil deals outside of the US dollar, and that's settling in gold. What's interesting and also off the radar for the last year and a half, no one's talking about this openly, is that over 30 countries are repatriating their gold out of the COMEX and New York Exchange and the London Exchange. They want their tier one asset at home. They don't want it in these Western exchanges because they don't trust the US dollar or the US or British LBMA banks, et cetera. They want it at home. Another sign of distrust. Another open and obvious sign of the new direction of where the hockey puck or the polo ball is headed is that the BIS just last year made gold a tier one asset alongside that one sacred cow, the US Treasury. That's a massive, massive headline. And yet very few people understand. Look what the banks are doing. Look what the world is doing. They're not replacing it all, they're repricing it. They're going away from it. Even the IMF, which used COVID hysteria as an excuse or pretext to talk about central bank digital currencies, are already saying it has to be pegged to gold to have any credibility. So again, there's massive moves in the world that are saying what we've been telling our clients: store value, your store of value is not a dollar or a peso or a franc or a euro or a yen. It's gold. You save your money in precious metals. When you need liquidity, you can convert it to a currency. That's what we do for our clients, but that's what the central banks and the rest of the world are doing themselves now. Look at what they're doing, not what they're saying. So again, it's not that the dollar disappears and is replaced by the yuan or the ruble. It's the dollar's being repriced. It's distrusted. It's not being replaced. It's just less trusted. And gold really is that tier one store of value, which we clearly see Bitcoin, others, and Coinbase, et cetera, are not. And yet, despite this, Egon, there are many who still feel that the evidence, despite being overwhelmingly in favor of gold, that maybe gold has reached peak gold, that the price is now topped out, that to buy now would be buying at a top, and that we're approaching that type of peak gold. Why, in your opinion, Egon, in our opinion, is that simply not the case?
Well, it's so easy to understand this for the ones of us who are studying history and understanding how governments without fail destroy the currency. And as they become more desperate, and we have now reached a level of maximum desperation, maybe not the peak yet, there's still to come. But if you look at you just look at the US increase in debt as the example I just mentioned, going from when Trump took over 20 trillion and now 35 trillion. And a few years before Trump took over, it was 10 trillion. And 1980, when Reagan took over, it was getting up just to 1 trillion. Just look at it, 1 trillion, 10, 20, 35, it's exponential. And I've shown in many articles what happens to exponential moves. At the end, they grow really exponentially. And this is what we're going to see with the debt, and that's what we're going to see. Therefore, also with currencies reflecting that totally and going to go down in value very, very rapidly in the next few years. And don't worry about which one comes first at the bottom. If it's the dollar or the yen or the euro, whatever, it's irrelevant. They're all going down at more or less the same pace. And that pace is already 99 or 98% since 1971. And we're going to go down at least 100 or 99% from here. So therefore, the people must understand that this is the time to really not just protect your profits, but you protect your money. As Mark Twain said, I'm not worried about the return on my money. I'm worried about the return of my money. And that's what people have to worry about now. Everybody's going to believe that we are going to buy the dips again. It's already started a bit. They are now going to lose their shirt if they do that, in my view. And therefore, it's also hold a certain percentage of your assets in the only asset and currency or money that has survived in history. Just whether that's, as our clients do, more than 20 to more than 25, many hold a lot more than that. But whatever level you're doing it at, hold enough so that that can save you if other things drop dramatically, which I think they will do. So that's really the advice to people. And we're going to have difficult times. We're going to have socially difficult times. We're going to have economically difficult times. And therefore, as I always point out, friends and family is going to be more important than ever, because we've got to help each other now, because we will have very, very hard time. On top of that, societies will be less safe also, and as we are seeing already. And the moves across the world, which is also historically happening, the same thing with migration, major people moving from one place to another, and therefore you have culture clashes, etc. That's going to build up to more problems in the next few years. And that's why, again, you've got to have a group of friends and family that look after each other. And as we said, hold a bit of gold, store it outside the banking system, and never worry about the value, because over time, governments will do enough to destroy the currencies and therefore make gold go to higher levels. I think, as I've said before, I think it'll go up by multiples because of what's happening in the world. But that's irrelevant. It's more important that you keep it as a wealth preservation asset and nothing else.
Yeah.
Matt, final thoughts from you?
Well, as usual, we're a mirror image of our final conclusions on this. I mean, the sins of our central bankers and our politicians, the debt sins of living beyond their means have come home to roost in the destruction of the currency that affects everyone, middle to lower to higher class, but certainly the middle class the most. You tack on top of that the destruction of the currency with rising costs of money and interest rates, and you get social unrest, you get geopolitical distrust, you get war, you get inflation, you get permanent ruin. And gold, as you said, cannot solve everything. It can preserve your wealth, but the real wealth is invisible wealth. The real wealth is what we've always said. We both know this. All of us know this. Hopefully, is the things that can't be counted in ounces or grams or dollars or yen. It's our relationships with the people that we care most about. But in the meantime, gold, as you said, can't solve everything. But for those that are thinking ahead, at least you can preserve your wealth from the destruction of our paper wealth that we can blame entirely on the bathroom mirrors of our central bankers and politicians.
Yeah, thank you, Matt. Well, these are important words that we're both saying, and I hope that people really listen, not for our sake, but for their own sake, and for the protection of both, number one, their family, friends, and number two, obviously, their wealth also. So thank you very much, everyone, for listening. Yeah, remember, life is still good. It's going to be more difficult, but it's still good. Enjoy it while we can. And there are always things to enjoy, and they don't have to be linked to money at all. So thanks very much. Thank you, Matt, for the chat. And we'll be back soon again. Thank you.
Sounds good.